There was hardly any pause in the crypto markets before a shocking news surfaced over the weekend. In one massive deal, one whale silently acquired 7 trillion SHIB. Every member of the SHIB community felt the impact of the finding. This question has now permeated the minds of all investors, from novices to long-term holders. How was this whale's knowledge different from ours? It all started when a researcher on the blockchain found a large transfer coming from an address that hadn't done anything in weeks. A cold storage wallet was used to transfer 7 trillion SHIB tokens from circulation to that location in a matter of minutes. Stealth accumulation on a magnitude not witnessed since SHIB's spectacular 2021 rise. No exchange involvement, no rapid sell-off. The timing was just fascinating. Whale inflows across the network increased by more than 2,600% in early May, and this purchase occurred just days before the burn rate soared. The price action revealed its own narrative as news spread. At first the market showed almost little reaction. SHIB slid laterally, ensnared beneath the 15 resistance level of the 4-0. Something strong, though, was brewing beneath the placid exterior. The amount of trades increased marginally. Derivatives open interest increased by more than 20%. Additional trillions were then transferred into secret wallets when other major addresses started to mimic the action. This purchase of a whale obviously wasn't a one-off. It was a well-coordinated effort to deplete supplies in preparation for the upcoming ascent. Upon further investigation into the whale's address's blockchain history, an intriguing trend was uncovered. This wallet was present throughout earlier SHIB breakouts as well, such as the short but massive buildup in early May, when whales transferred 6.42 trillion tokens in a single day. In reaction, SHIB surged by almost 11% at that time. The possibility of a comparable reaction is now staring every trader in the face, with 7 trillion tokens locked away. Based on its past behavior, the whale seems to only act in response to unexpected big stimuli. Now the question is, what might have caused this certainty? Surprisingly, improving the ecology is the most likely option. Some have speculated for weeks that new staking rewards and burn-on transfer mechanics will be included in the next Shibarium release. A leak earlier this month hinted about Shiba Inu 2.0, promising to destroy billions of tokens monthly. If this is accurate, then every transaction would accelerate token scarcity by contributing to an automated deflationary scheme. If the whale thought the supply will drastically decrease, driving up the price as fewer tokens try to meet the increasing demand, then it would make sense for them to buy this much. A top-tier exchange listing or staking program that is currently being developed could also be a motivating factor. It appears that both retail and institutional traders are getting ready for a breakout, as both institutional inflows and perpetual futures open interest jumped alongside the 7 trillion purchase. In order to launch new yield products, exchanges typically need a substantial amount of liquidity. The whale may be setting themselves up to offer or secure benefits for early entrants by securing 7 trillion tokens. This would essentially give them a privileged position before of the general debut. The hypothesis of a forthcoming strategic alliance is just as persuasive. Speculation about a possible integration of SHIB with large payment networks has grown in the last month. Working with a worldwide payments provider would elevate SHIB from the realm of speculative meme coins to that of real transactional assets, appealing to mainstream investors. Under these conditions, demand could surpass all previous records. Perhaps the whales are placing a wager on SHIB becoming a payment rail, secretly securing trillions of tokens before word gets out. The escalation to a possible explosion is further supported by technical structures. SHIB has been constructing a symmetrical triangle according to chartists, by consolidating within a narrowing range over the last 2 weeks. When volume suddenly spikes, these patterns generally show up first. The tightening price range indicates increased pressure, and the 7 trillion acquisition added fresh liquidity to that structure. The road to 4020 and beyond could be nearly vertical if SHIB can close firmly above 4015. At the same time, macro factors are starting to work in SHIB's advantage. Altcoins often follow the lead of the flagship coin as it gathers momentum, and Bitcoin has found stability above critical support. Regulatory ambiguity in key markets has diminished, and crypto fund inflows have been trending upward. With these wider tailwinds, SHIB is better positioned to reap the benefits of rotating capital flows, which is particularly true if whales are already well positioned. The risk, however, is still there. According to past statistics, large-scale flash purchases like these might occasionally signal distribution phases instead of rallies, when whales stock up before selling into increasing retail demand. Where the tokens ultimately land is the defining characteristic. This wallet did not use exchange hot wallets, instead it moved its holdings to cold storage for the long term. That points to a positive thesis. The whale is preparing for a lengthy journey, sticking with the basics instead of plotting a way out. Token burns deflationary effects are another factor to think about. Over 28 million SHIB were burned in quick succession, an 11,000% increase in 24 hours, on the same day as the 7 trillion transaction. The community and developers have recommitted to scarcity, even though these burns are modest compared to whale buying. When you add it to the impact of the greatest single transaction in history on circulating supply, it becomes clear how enormous that is. The implications for regular holders are straightforward. Danger and opportunity must never be separated. The potential payoff might be enormous if the whale's moves are really related to an impending announcement, such as Shibarium upgrades, exchange staking, or a prominent alliance. Goals of 4 zeros 20 and beyond in terms of price would suddenly appear doable. However, once the initial excitement wears off, this move could encounter downward pressure if it turns out to be a distribution play. The following days are going to be pivotal. Be on the lookout for confirmations from the SHIB team, facts about exchange partnerships leaking out, or network improvements that could indicate new burn or staking functionality. Keep an eye on blockchain analytics. Will other major holders start to do the same? Watching volume and the token's movement into cold wallets causes the exchange supply to contract even further. With sustained high trading volumes and a price that stays above the 4 Mander zeros 15, SHIB has the potential to reach its next milestone. No matter what happens, one thing is certain. Whales aren't playing around with 7 trillion token trades. Facts, insider information, or faith in what's to come guide their decisions. This is an unusual opportunity for the general public to learn what the wealthy are anticipating for the future. The upcoming chapter of SHIB is sure to be one of the most exciting in the token's history, with potential upgrades, listings, and global payment integration that might change the game. Consider what was the whale's level of intelligence. Then what are your plans to address this issue? There is movement in the market, patterns are taking shape, and supply is becoming tighter. Right now is when you need to focus, to examine all signs and determine whether you will ride the wave or stand on the shore and watch it crash. Simply put, the run might be quick when little gaps finally open up. Removing a zero might be the first step toward SHIB.